BLS, you've got one job to do, and could you please start doing it right? What am I talking about? I'm talking about on Friday when we're expecting the labor report to come out showing that there was 170,000 jobs added. That was the estimated number. Instead, you come out with a report showing 216,000, therefore putting fears of inflation back into the market. And what does that do? It moves rates up. And then the revision comes later in the day on Friday, and it shows it's a negative 71,000. Well, why is that a big deal? Because you're doing it every month. For 2023, you were off by 500,000 jobs on the job revisions. And every time it gets released, the news media picks up on this number that you're given. And then afterwards, we get the revisions and it's not picked up on as much. So please fix that because you're giving us fears of inflation that don't need to be there. Now, speaking of inflation, we have two main reports that the Fed looks at. We have the CPI report, the Consumer Price Index, and we have the PCE report, the Personal Consumption and Expenditure. And both of those are going to be very good for us in 2024, especially starting the year. The way the reports work is we look back to the previous year. So this report that's coming out on January 11th for the CPI is going to be based on 2022's inflation number. And then what we're going to get, comparing that to December 2023's. Well, in 2022, that number was up around 0.79%. It has dropped drastically down. And to go with that, we have January's number is going to be at 0.74% that we get to look back at, and February's is 0.76. Those are all expected to be much lower, therefore helping inflation numbers to come down. Then the Fed itself will be reporting based on, they like the PCE report, the Personal Consumption Expenditure. And on those reports, we see the January one from last year was up higher, and it's dropped all the way down to 0.1 this year. That's the expected number. And what the Fed is asking for is they want the core inflation number to be at 2%. But they've said they will start lowering interest rates prior to that. So they're expecting to drop down. So the January number one probably won't do the trick because that's going to come out and it's going to show the numbers are getting better. But the Fed's going to meet, and we're going to have that right afterwards. The Fed meeting is January 26th. But the good news is we're going to see the February number drop down and the March number drop down as well. And in March, we have a meeting on March 20th. And by then, we should see the PCE number coming in at less than 2.5%, which is what the Fed has asked for. They want to see it coming down. So I truly believe we're going to see after the March 20th one that we're going to see the Fed, that's going to be their first rate drop. So I expect, again, a very good March. And I think it's going to be a good start to the year for 2024 because we're going to see those numbers keep coming down. Those of you that are first-time home buyers, and there's a lot of them out there, you've been looking at condos. A lot of times first-time home buyers need an FHA loan. And the problem that they run into is FHA doesn't approve all the condo complexes. Most loan officers say, sorry, it's not approved. If you are a first-time home buyer and you're looking at condos and you can't get one that is so-called approved, please reach out to me. There is ways to get single use or single unit approvals. And I'll take that extra time, put in the work to get that done for you. So I hope you and your realtors have a great year.